back to my channel. So today's video is going to be me providing an overview of my live trade on Apple. I'm going to go ahead and provide a breakdown so you guys can see exactly my entry and exit points, and then also a full synopsis of why I chose to take this trade. Okay, so as we can see here, I have Apple pulled up on the chart, of course, and you can see I've already charted for a few price levels, mainly being this 223.98. And we can see the high for the day, at least so far, has reached a 223.95, which is almost nearly exactly what I've already charted for price levels, which lets me know that my evaluation was correct. So now what I'm doing is essentially watching for the break of this 223.43. I'm essentially going to take a look to see if it's going to bounce from this level or if it will respect or reject it. So I'm just being patient, waiting it out, looking to see what exactly the stock will do. Is it going to reverse? Is it going to continue that push up? And I'm just evaluating the levels from here. So this is just the patience game, just waiting it out to see what's going to happen. And I've showed you guys this several times before when I've done live trades. So yeah, this is just going to be me. I'm obviously not going to stay on this screen forever. I'm going to fast forward so you guys can see how the stock plays out. And then you'll also see how this trade plays out. So yeah, I'll just go ahead and kind of zoom forward and fast forward to show you guys the results. Alright, so I specifically want to look at the time period from 9:24 here up until about 9:54 here. So this is just a 30-minute trade. The initial price action takes place starting at the 9:26 mark right here. And of course we see the 9:26 candle, the body is directly in the middle of the price level at that 223.43 mark. And this is a previous level of support before beginning to show signs of weakness. Now, this steady decline suggests increased selling pressure as the price gradually drops from the high point with bearish candles, showing sellers pushing the price lower, of course. Now, the price continues to fall below the support level previously established at that 223 mark, and this signals a possible reversal or rejection from the upper resistance around that 223.98 up here. Now, several bullish candles appear immediately after this level, with a gradual shift toward lower highs, and we can see that. And then, of course, this indicates that sellers are gaining control and pushing the price downward from that 223 range, but there's an early indication of bearish pressure as the stock fails to retest or break above this level, which helps to signal a strong rejection from this zone. So this 223 right here, we see that. And just to provide a little more context, I want to break down essentially what we see at this 223.43 price level with this particular bearish candle here, and then being followed by such a strong wick, strong shadow, upper shadow for this second candle at the 9:30 mark. This would have gave me the biggest clue and indication because, again, the sellers had such strong pressure at this particular mark here, which again showed us that the price was being pushed down. So if anybody is wondering, how do you analyze the candlesticks to understand these things? Well, one, I see a strong shadow. Let me kind of zoom it in so you guys can see it better at that 9:30 mark. This particular candle here at the 9:30 mark has a strong wick, upper wick. And what that means is that the selling pressure was extremely high because they had to essentially push the stock all the way down. We've seen that it started fairly high and pushed the stock all the way down, which let me know, again, that's a clue that this is going to be a rejection at this 223.43 price level, which again helped me understand to hop into this trade very quick, not a very long trade at all. It's such a quick scalp on the stock just to get a quick little momentum shift and again ride it all the way down to this 952. Take profits on that dollar move and be done for the day for Apple. Again, I always have other indications. It's not just a bear chart, but I like to show you guys this when it looks bear because I don't want to confuse anyone. So the second phase to mention is what I'll call a semi-mid-session stabilization of decline. And this takes place after the long-bodied 932 candle here. And we can see this is going to show the smaller candles begin to kind of consolidate, indicating a brief phase where neither buyers or sellers are strongly controlling the trend with power. So during this phase, the candles are mostly red with a few green ones sprinkled in, which indicates that the selling momentum is slowing, but buyers aren't stepping in strongly enough to push the price higher. So this consolidation period here suggests that the market is trying to find support after the initial drop. And the lack of larger candles here indicates a lack of strong momentum in either direction. So buyers may be attempting to absorb the selling pressure, but there's no substantial push to reclaim previous highs. And because of that, this is the range-bound activity signaling that this time in the market is leveling out slightly for buyers or sellers to take control. Now by this time at this 950 candle, the stock reaches a low of 222.46 for the session, and this marks a new low for this range for the time frame. Now, because this is a larger red candle, it clearly shows the intense pressure that sellers have regained full control. So the breakdown is clear as each candle closes lower than the previous one because the sellers dominate the action without much buying interest to counteract the fall. Now at this time, I'm already taking profits and exiting the trade slowly, and at around 9:54 here, I'm completely out of this trade. So anyone wondering essentially how I did this, you kind of saw the breakdown in the beginning. I just showed you those price levels. I was looking again for it to either respect this level or reject this level, and we see a clear rejection. Now, once it hit this second benchmark for me to kind of see that, that's when it gave me that confirmation I needed. Obviously, I've had the MFI pulled up to see how the money is exactly flowing, and that also kind of coincides with the RSI to see exactly how the strength of, the index is moving. So that was a good enough indication for me. I had the EMAs also pulled up. I just have it a clear chart again so no one's confused. I know that can always be a little bit of a clouded thing to see on the chart, so I try to keep it as clear as possible. But yeah. Now the other important factor is the volume analysis. The volume is moderate, as you guys can see here, throughout this entire 30-minute period, with no significant spikes that would indicate a dramatic influx of trades. And this suggests a steady downward trend driven by consistent selling rather than just sudden large sell-offs. And that's exactly what I was looking for. I was only anticipating a $1 shift in price, and that's what happened throughout this period. This steady volume combined with downward price action suggests that controlled selling was taking place rather than panic selling. And with the absence of high volume spikes on the green candles, this further indicates that buyers are not strongly stepping in to end the decline. So all in all, how I view it is the consistency of volume on the red candles, it reinforces the idea of a gradual and persistent downtrend rather than a sudden sell-off, which set it up for the further decline since there was no significant buying interest that arose. So I really hope this makes sense now that I've given a breakdown of both the volume and of course what the candles are doing at this time. Yeah, and essentially that's just how I played this for today. Quick, easy, nothing super strenuous, nothing super complicated. Just watching the charts, reading the candles, and understanding price dynamics and how price action works. And again, I had previously charted for these levels, so I'm going to keep them on my charts just for future reference because I always like to do that. And again, you guys, let me know if you guys traded Apple today or any other stocks. I know today is kind of a crazy day in terms of like trading, so yeah, y'all let me know what y'all hopped into or if y'all just avoided the market altogether today. Okay, so there's a few things I want to go over real quick. First, when trading, understanding how to manage minor price fluctuations is key to staying on course and capitalizing on the trend. It's worth mentioning that in any trend, there will often be moments where the stock may briefly dip, rally, or move sideways. And we saw that with this bearish trade. There were still moments of bullish sentiment, but these shifts don't necessarily mean a reversal is promised. Instead, they are often short-lived. And in this case, we saw the consolidation phase, where the price only briefly stabilized and moved slightly upward before continuing on the downtrend. So the main thing to know is that it's always necessary to recognize normal pullbacks and consolidation in a trend. These pullbacks can be unnerving for some, especially for those new to trading, but they're simply part of how the market behaves. And in reference to a consolidation phase, these periods don't always signal a change in the direction as long as the overall trend remains. So learning to trade through these quiet periods can give you a clear path to ride the full wave. With that being said, one effective approach I always have to handle these price fluctuations is to mark key resistance levels that act as boundaries. If the price stays below this level, the downtrend is likely to still stay in place, and you can see that here on the chart. Because resistance levels provide a solid checkpoint, they give you the awareness to stick with the trade and avoid early exits during normal ebbs and flows. Now, in regards to the strategic stop loss placement for this trade, you ideally want to set it slightly above the key resistance level so you don't get shaken out by the small price changes. This ensures you're only exiting the trade if the stock genuinely does reverse. With the stop loss in place, you can allow the trade plenty of room to level out while still protecting your capital. Additionally, it's important to evaluate the setup to avoid panic selling. So that's why I always stress that entering a trade with a high probability setup with clear entry and exit targets gives you the foundation to stay in the trade through these inevitable minor price changes. It's essential not to panic sell if the price briefly moves against you because you can miss out on gains. So just trust your analysis, which led to your entry in the first place, and always stay focused on your measures. The last thing I want to mention is maximizing gains simply by staying patient. All throughout the trade, you heard me mention this. The benefit of following the trend fully is that exiting a trade too early means leaving money on the table, and that's not favorable for anyone. So by staying patient and letting the downtrend play out, you allow yourself to fully realize your gains. This approach is particularly valuable in puts, where the payoff is often larger when the stock drops quickly or sharply. And also, I think it is helpful to review your performance post-trade. So after closing your position, take time to reflect. Did you stick to your setup? Did you exit too early due to short-term price noise? Identifying these habits helps you refine your ability to get better and better when entering future trades. So with that, that'll pretty much do it for this video. If you found this information to be helpful, feel free to leave a comment down below. And as always, I thank you so much for watching, and I'll see you in my next one.